Hello, West people. It's the Market Sniper coming to you on a Monday morning. Yeah, Monday. Help us fight the Monday. People don't watch YouTube so much on Monday, it seems. Yeah, they're all about work. Don't work. Don't be silly. Watch the Market Sniper. Understand how the world works. Go from there. Yeah. So hit the like button to bring them all in. That's greatly appreciated. And let's get straight on with it. So what are we talking about today? Well. 3 holes in the ground. In fact, more than 3 holes. If anybody knows how to do anything, it's the current Labour Party. They are very good in unearthing and creating black holes. In fact, they're such space cadets that if they could turn black hole creation into a business, they would be the out and out leaders in the space, I can assure you. They'd probably drive the industry into bankruptcy with taxes, but nonetheless, they would initially be the leaders. So let's have a look at UK debt markets, because this is why we're getting in touch with you, and this is what we wanted to show. Let's just minimize that. So we've got the 20-year. Let's start on the 20-year. It's a bit of an abstract year. So I'm going to look at the 10-year GBP debt markets, 10-year, 20-year, 30-year, and how many fingers? 40-year. There we go. Took me a while. It's early in the morning. We're still loosening up. Had cold plunge this morning. Everything cold. It's the only way I can cope with the 37-degree Cyprus heat. Here's the chart. This is your upside HVF structure. Must bring in our overlay draws for you as well to just highlight this all. HVF upside structure continuation pattern is our call, higher rates therefore coming. And we did call that this one had broken sometime before. And it did what we called a feign and break. Why? It was a little bit ascending, so it takes a while to square up a little bit. That's because rates kept getting bought. This did for Liz Truss, by the way, the high over there. You are already higher on the 20. Let's at least confirm that. Is that right? Yes, you are higher. But it's about to get a lot faster higher. And here's what's happened. Feign and break over there, small pullback. Everybody, it's okay. We forget about rates. All going to be fine in the beautiful world of the United Kingdom, having a decent summer, it seems, which must be a very foreboding message. Just never happens. So there's the first interim target, that little dashed line you might see there in purple. There it goes. You get a run, and then you get a pullback. Where to? To the funnel. You see the hammer on the funnel. And then actually it kind of went sideways for a while, and the whole thing got parked up. Why? Because dollar became a little bit of the attention. The dollar was devaluing. A little bit of this took some of the heat off the UK. Don't forget, I'm talking about the United Kingdom today. But it is a proxy, much like America, for Western debt situations. If we have a look at the others, and we did the whole Euro mix, we did the Dutch, the French, the German, debts, you name it, all Northern European, which are supposed to be the serious economies of Europe. There was those silly pigs, Portugal, Italy, Greece, Spain. We expect that from them. We're proper. Well, no, you're not. That's how it's kind of going. So we've kind of been in what I would refer to typically as a stall box between the funnel, that's that level there, and the first interim. And what's actually been happening quietly is that inside of that, you've been squeezing upside. You've been squeezing to the upside. That's what's been going on. And on the others, I'll actually be drawing a little fractal structure on that as well. So where does it go? I started with this one because it's the big number that will happen, and it will happen suddenly. So my expectation is going to see a fairly brisk move in the near term that I think runs you at least to the second interim, 6.023. And by the way, that happens before the end of the first week of November. So I'm giving you quite a hard timeline. So most people will say, Bitcoin $1 million. They don't tell you when. They don't tell you it's next millennium when the dollar is worth 1 cent. It's about time on this one, because of the nature of HVF method, which we will teach you all about, and you'll watch us implement in the markets live when you become a community member. And we give you a little sneak peek here in a live stream like this. Click the link below, by the way, to book a call if you would like to build wealth. Overall, debt going down in value, rates up. Remember the inverse relationship. We are looking at the yield, and we are on the weekly chart. I maybe should have said that a little sooner. Weekly chart, it's the 20-year, and it's the yield, rates up. By the way, what is the knock-on effect of that? Terrible environment for housing. So during the largesse of big money being made in the UK property, it's the one thing that went up. They never let the British down, was their housing market. You know, they used to small country, big amount of people, etc., etc. And unfortunately, they kept layering and layering ever higher duties for buying property in the UK, and adding, well, if you're buying at this price, it's that, and if you're buying that price, it's this, till eventually everything that you buy in the UK in the southeast is 500,000 or more pounds, unless you're buying a one-bedroom apartment, and even still you can spend over that in central London easily. Anyway, all those taxes got loaded up on it, which makes it a lot more costly. But because it was still going up and all of this liquidity, and we're all fine, it survived. Now you start to face an environment where the banks don't want to originate borrowing. Yeah, no, they're not interested. Why? Because they sit with that debt on their own books. They can't securitize, sell it to anybody else. And of course, the government debt is crowding them out, creating debt even more so. So there's this huge burgeoning flood of sewage investment called debt that nobody wants to buy because it stinks, and there's enough of it. You can pick it up for free anytime. So what's happening? Well, property market crash that we've been predicting, and we've been saying the same for the US. So since 2020, the back end of 2020, when we called the reversal in the 40-year bond market, and before that, we had highlighted that central banks, well before 2020, had started to pivot more towards buying gold. Remember, in 2000, gold was just $253 after subprime. That started to liven up, and you had the 2011 run that took you to $1,927 we hit on gold. So that's quite some move from 250. You know, you kind of like 4 to get to 1,000, and you almost made 2,000 there. So there was about an 8x, almost a little bit under, maybe 7.5 to 2011. That was the beginning of the early central banks repositioning in gold. And especially, we know China and Russia, everybody's still thinking and talking like China has 2,500 tons. It's almost comical that. I can tell you, just on subsistence mining that they're hoovering out of Zimbabwe, Central Africa, going to Dubai to be refined, and going straight over to Beijing, that they have probably bought 10,000 tons alone just off of that, never mind their normal imports, how much they're mining themselves and everything else. It wouldn't shock me if they were in the 50 to 100,000 tons. Clearly, what's being stated just isn't being updated. Anyway, that brings us back to this. What's actually happening is, during that period in the bull run from the lows of gold at 250, when bonds were super strong and a reserve asset, to 2011, that was the first shock. And that came with the subprime crisis. Then we had the CV19 crisis that ended the bull market for bonds. So bonds weren't as good between 2011 and 2020, but they were still inching up. But end of bull market entirely was our call. And that's when you got the 55% correction on long-term debt, which is still very much out of hand and a major problem. Now, banks, when they do mortgages, are doing long-term debt, 20 and 30-year debt. So that very specifically affects the rates for housing. This is the problem, not just for the UK. This is US, and it will come for Europe as well. We can take a look at it. And we've opened the yields markets. We've only just started trading. and we're very close to the high of the close on Friday. And our call is that this is actually breaking out here, and it will surpass that high and move on its way to do the 6%. Don't forget, when it triggered down here, it was 4.9%, and our midpoint for most of this period from the truss into the, the whole Kwarteng affair into Keir Starmer, these last 2 years, you were actually at about 4.5 on the 20-year. So 6% is quite significantly higher. Another 1.5, that's kind of a third higher. And in the end, we say after maybe a pause period here and a bit of chop around, that it'll get disorderly and run through 7.57. That's 7.6. So everyone who's thought rates have stopped going up and we're all going to have this pivoting vibe and the central banks, and we've kept saying they can't do it. They can't do it. There's YouTube channels that are saying, we don't understand why the Fed can't see that the economy slowed down. They should have done cuts. As usual, they're late. And generally, they are late in normal environments. This time is different. The bond market turned. The bond market turned. The bond market can't be sold at its current price with its current yield. They have a problem. There's an insufficient liquidity on the long end, and they're actually just keeping it all hanging, spinning plates on very light volume. You get a big seller on the long end, they will absolutely spike the rates. That's why you've seen Japan go up, which we've covered on this YouTube channel starting 2 or 3 years ago, after we'd 5 years ago told you that the US debt market had turned. We started to do a lot of coverage of bonds. We've spoken about the UK market before, on debt before, and we are highlighting that this one wants to be the number one idiot and has forced itself to the front of the queue, the United Kingdom, but that it is an endemic issue for all the Western nations, and your living standards are going to go horrendously down in those Western nations, which is why we said the very unpopular phrase, if you live in the West, get out. It's not popular. Nobody wants to hear that, but it is an absolute fact. Your environment matters. For finding jobs, for getting work, for mood, for everything. If it gets a culture, a psyche of absolute depression, there's no money, and people stop spending because there's no money, it accelerates the down curve to the downside. You have no money in your government. They are creating black holes. They need more money. They don't rein back taxes there. They keep doubling down, saying we need to take more. They crowd everything out. They destroy business. They chase the millionaires away off to Dubai, UAE. Don't do it. It's a trap. But so they go. And so the vicious cycle and the doom loop absolutely accelerates into the vortex, because you've got World Economic Forum, socialist pigs like Keir Starmer, who, along with his bosses like BlackRock, now the new head of World Economic Forum. Isn't that funny? Isn't that funny? And you thought they were all separate organizations. They are just different name teams, all part of the same cult that are busy destroying your nation and bringing you into Marxist communism. And they're going to say, well, we need a more equitable society after this difficult time. Isn't that going to just be the pitch? Meanwhile, government did it. Government did it under the auspices of the dark state. Long-standing government did it, destroyed it. It's active intent. It's a controlled demolition. We invented that phrase. We used it post 9/11 for the financial markets. Now everybody is using it, because some people are also realizing it's not incompetence, it's intent. It's a coordinated intent. We could see it. Anybody with long-term planning could see that was coming. 7.6% to be run on the 20-year. One of the most common durations taken for property, 20, 30, 25 years. This is the duration that you borrow when you are buying a house, typically. That is very high. By the way, when the market goes there, the actual deal that you'll get from your bank to borrow with their margins and intermediate will be a lot higher. will be a lot higher. For example, you are not paying 5.4 right now in the UK. You'll be paying quite a bit more. We can Google that. Anybody want to do that? What's for us on this live stream? Go to whatever it is, Money Supermarket or whatever, and do a 20-year or a 25-year fixed deal. The only deals left where the rates can't go higher. Find out what a fixed deal, not a variable rate, a fixed deal for 20 or 25 years right now, available in the UK with the standard deposit, which is usually 5, but let's say you're 10 or 15% down. Let's see if what they'll do. What is the fixed deal for 25 years? Drop it in the comments. I'd like to see. You go do that bit of research while we run the rooster on all the other particular durations that are common. I'm going to go up to 30 because some people will do 30 and 25 sits in between. And then we'll finish on 10. So let's have a look at this guy. How's he doing? Well, the curves look very similar. Damn. Let me get the share chart up. Sorry about that, guys. I should have tunneled. Let's do it. I am absolutely need reminding of that. Let's go. Let's show you that 10-year again while we were talking. My apologies, the 20-year again. So let's see it and just do the edited highlights one more time. GBP 20. So the 20-year we started on. I apologize for that I wasn't sharing. It is such a capture. I wish they would. They don't put a screen on your screen so you can't see it. Anyway, it's all excuses. It's my bad. So that was the triggering event, but you got pulled back in. That was the first interim that I was highlighting. That you got pulled back. Let's make sure this time that we are actually sharing. Yes. Okay. And that it's doing the right thing. You fly blind with this when you do these live streams. So then that was the box I was referring to between the just in time and that target over there. But now you are squeezing up. That's what's happening. That's what's happening on the 20-year. That's what's happening on the 20-year. And as a result, this was the 6.0% that we are talking about as the second target that will run up there. And we've said to you that it'll happen before November. That's our time stop. That's what HVF method gives you. This is your whole squeeze that we are talking about from back then. That was the trust high, by the way, that I was highlighting. So we've just recapped that for you. And that's been your stall box and you're breaking out now. And in fact, you can see it like that. That's the 20-year. And the target is 7.57. So we've covered that one now better. Only this time you got to see. So we're going up to the 30. Let's show it. The 30-year. So similar type chart, a little bit more creeping out. So actually that is already higher than lower than that. So on the 30-year, you're already quite a bit higher than when Liz Truss was thrown out of government. Liz Truss was thrown out of government for that spike on the 30-year, by the way. So, you know, that's that got her fired. This is where you are with Starmer. Now, this is a smaller fractalized setup. It will go further still. So it's not a case of the 20-year goes to 7.5 and this goes to this. It's just that the pattern set up differently, and we're looking at a smaller time frame pattern here. We're just capturing this fractal over here. So believe you me, when the 20-year runs the 7.57, this will have outperformed and continued to run. And it is making higher highs. And when we first did this UK draw for you, we highlighted it, and it triggered, and then it pulled back in and bounced on our midpoint. Remember that? Then it looked like we were all wrong, and everybody was thinking, oh, we forgot about it. We didn't give you more coverage on it for a while. Boom, you made that second interim, then you pulled back again. People not really noticing that it's getting higher because it's going up, but then it's going down. The minute it goes up a little bit, then before everyone gets too angry and a headline starts shouting, it comes a little bit down. But actually, you can see you're getting higher and higher. There was Trump tariff tantrum peak, it also affected the UK market. You spiked high. So it didn't get noticed in the UK because it was happening in America and everybody else. Everybody said, oh, it's just a global thing, and all of that. And it came down, but it only came part of the way down. And in fact, you had a new floor. So you've actually been squeezing right here on the second interim over there at 5.3. And now what's happening? Where are you? What's happening? Oh dear, you've taken out that third high. There's actually a fractal in there. So we're going to show you that as well. And how do we do it? Well, they are HVFs. That's the lovely thing about this methodology. Click the link, book a call. What can you see? You can see we're squeezing higher in that second interim. You need a little more winding up energy. Coil up, and go again. And let's have a look. So let's do it. Why are you not drawing? Why are you not drawing? Why are you not drawing? Is that the low? It should go grab that one, that one, that one, that one, and that one. Why are you not drawing it? Your tools never quite work the way they're supposed to work sometimes. I wonder what I've done wrong this time. Let's move it to the left, move it to the right. Yep, we're just waiting to catch this draw over here, and I'll show you that this is a winding up structure that is going to go higher. And I'm going to draw it manually. You can see it here. That's a localized high. It might be those are just a little bit lower. That's why it's not drawing it. Sorry, that's right. I missed that. So it's like that, like that, like that, and like that. So we have another squeeze, and that is just triggered. It is just broken. That's why we're doing this update today, because we're giving you the headlines of tomorrow early. You're going to start to hear about Labour's black holes in the Britain and how rates could go higher, and there could be a crisis in the market, like when Truss happened. You see, Truss was actually thrown under the bus. You see how nicely it rhymes, because she was the wrong prime minister at the wrong time. The whole indebtedness is now here. They sacrificed the voting government, not the permanent government in the background. Whitehall, the big blob that includes the Bank of England and Bailey, all of them, they were all protected. They don't get elected. You see, I'm rhyming today. They're all protected. All the ones that don't get elected are protected. They stay in government, and they throw out, they say, there, we threw out the one you voted for. We gave you a new chance to vote someone new. She broke the economy. Well, actually, she was trying to stimulate the economy, but the debt markets didn't want to help. But who created all those debt markets? Tony Blair, Gordon Brown, David Cameron, and everyone before them that continued to borrow, send money to Israel and Ukraine and war and welfare, and keep bringing them in and making it tax higher, tax higher. You see, you do that, you break the economy. It is a destroyer culture. That is what Marxism does. It destroys good functioning economies so that it can take over as the final solution. Yes, the final solution. That's their phrase. That is a triggering event. That is a triggering event. Hit the like button for saying the final solution, because the algorithm just hates that, and we need your help. So you hit it now, because we tell you how it is. We tell you how it is, not what the algorithm wants to hear. So this is a major move to the high side. You're going to run 6.106 on the 30-year and a lot higher, because the other big patterns on the 20-year are also going to work. So we're looking at a slightly reduced pattern in terms of how it shows up on the 30-year. So let's go to the 40-year. You can see the theme is the same. Let's check in with your comments as well. We'll end the share screen, but we promise to come back to it. I am Michael, says somebody, a Freemason fallen angel. Oh my goodness. Panama, Wales, Frank spitting his 50 cents. Yes, that's right. Too right. Okay, so let's go back. You're going to have a similar housing crisis for the older generation that was in the 80s, that was made Soros his billions so that he could spend the money on actually doing all that he did. that's then brought about the open society and made him all his money. He transferred wealth with a combination of a cooperative UK government that went in too high on the pound against the Deutsche Mark before the EU, the original European monetary system, which was the forerunner of the EU, so that he could then short and make a bundle of cash. That's right. And then use that cash to advance the agenda of the you-know-whos. So there they are. Let's watch and draw this fractal. I can draw this fractal. I've done it already. There you go. So here is the 40-year. So this is the Great British Pound 40-year. This is the yields. Rates are going higher. We continue to tell you, once it turned, rates will go higher. They'll keep promising pivots coming around the corner. After the CPI last week, what happened on the US CPI last week? We had certain friends that we sometimes like to poke a bit of fun on that were saying, you see, tariffs don't create inflation. People that are very strong believers in the dollar strength story. What's actually happening is it's a dollar weakness story. Even Trump started admitting about dollar weakness. Go watch a recent appearance of Luke Groman on the Franklin Mint guys channel. You'll see he's got it more accurately correct. The dollar is being weakened, and Trump says it's good for business. He likes a strong dollar, but a weak dollar, good for business. We need jobs to come back home and all of that. Here's the setup on the 40-year. On the 40-year, this one is a 606. Again, the smaller time frames, believe you me, if the 20 is doing the 7.6, these will be overperforming. They'll be well beyond this, but these are the targets. We gave this as a breakout to you some time ago, October 24. Go look at our YouTube channel. Let's do it. Let's prove it. Some people say, you didn't say nothing about it. I don't care really when people believe, but just so that you can see UK debt, GBP 10-year, the market sniper. Go and have a look. You will see that we were giving you when these things were breaking out the first time. You can see a lot of them in the shorts. You can see a lot of them in the stagflation. Let's do UK debt crisis. Let's include that word. So we've covered this many times. Let's make sure that we are sharing. We are, and go. UK debt crisis. There's also the European one where we did the UK as well. UK debt crisis looms. Yep, that's us now. Whoa, 1 month ago. Yeah, you can see the shorts. 1 month ago, we were talking about it, 5 months ago, etc., etc. So this is, in fact, something that we've been warning about, and technically you can see it, and now it's coming to a fruition. That was a key triggering event in October. Now, what's happened? That's October 24, by the way. You broke, you came back, you went up to the second interim. We've been churning. This was tariff tantrum, the beginning of this year, that gave the spike. And then you got the second rally like that. You got the second pullback. You have just triggered on Friday this smaller winding up structure that I was showing you so nicely on the 30. That is helping this bigger structure all get through 6%. And this one's target confluence is up there. So the 40-year long-term UK debt is well on its way from when we called it over here at 4.7. It's just triggered again at 5.5. Now, if you think that doesn't sound like a lot, believe you me, it's a lot, because the number it is on is absolutely huge. That is a big extra percent. Interest rate payments to the banking cartel, the cultists who are given the exorbitant privilege of borrowing your money into existence. The bulk of your taxation that you pay in the United Kingdom is going to those nefarious tertiary extractors, the big parasitic tick that has his money funnel through your neck into your jugular and is sucking right out of your main aorta vein. The bulk of what you pay in the United Kingdom, a massive part is going to the military-industrial complex and serving interest, just like it is in America. And serving interest to who? The people that were given the privilege to say, we'll borrow money into existence like you owe us, out of nothing. Out of nothing, I created a paper transaction that meant you have to pay me for giving you your money system when a government could have done it for itself. That is usury extraction right at the highest level. You are paying it, and the bulk of your tax is going straight to those people who own those debt instruments. And you are the borrower because your government did it in terms of your name. You as the citizens, you are the collateral for the debt that the government you voted for because you participated in the election and voted. That's right. So it's on you until you stop voting. Stop voting, stop endorsing that system, stop living in the countries that are doing that. You need to stop playing, full stop. You need to go, you need to stop, you need to stop cooperating, you need to stop complying, and you need to stop paying taxes to predatory corporations that are ripping your face off and are going to bring about an absolute economic collapse on your nation and then tell you it was you overconsumed, you overborrowed. That's what they're going to do. And they'll be part right because you voted and you paid them tax. You complied. You went along with it. So don't say there, oh, but I've been done. Don't give me your victim stories. I'm here telling you what to do. I'm telling you what you should have done. Don't play the game. Anyway, 6.06, 40 year. You need to leave. You need to vote with your feet. You don't vote in a box, ticking a cross. That's some occultic ritual they've got you dancing to. Let's have a look at the 10-year. Let's go to the 10-year. 10-year, one of the most common durations. 10-year for putting out debt. You can see the HVFs here as well. What happened on Friday? What happened on Friday? There again, on the 10-year, that trust was thrown out at 4.6%. You are now higher on one of the most common ones. You are in a breakout. We called it back then in October. You saw the YouTubes that were there and the shorts running into November. That triggered. It went up. It came down. Everyone thought, yeah, I forgot about it. Let's go watch Tesla. Let's go watch Netflix, etc., etc. Bang, it smashed up to our second interim target. That target was made well in advance of the projected time. That was March of this year. You actually did it in January of 2025. That was part of peak tariff tantrum. Then you got this structure that is wound up. There you go. That's how it looks. There, and there. And on Friday, we were sitting watching that and saying, oh my goodness, here comes the next leg on the devaluation of the debt instrument as an asset and the increase in usury extraction to be paid by the government, aka you, who now need more tax, keep finding black holes, keep having bigger interest payments to make and don't have enough money, but I've got plenty of time to recycle rubber dinghies to do the George Soros thing and bring you over fighting age immigrants from other lands. That's where you're at, so that you can put them up in 4-star hotels in central London. That's your country. That's where you're at. It's Marxism. None of this you voted for. It doesn't matter how you vote. You don't get what you want. You are participating in a pointless ritual that is permissioning your own personal destruction and building a surveillance society grid that will be dropped over you. You vote by leaving, by going where you treat better, by not paying tax to absolute corporate predators. That's how you deal with this situation. You will see 5.758 on the 10-year. This is the shortest duration where the rates are lower. We come down from the 40-year, the 30-year, the 20-year. We're at the lowest duration where they think they still have some semblance of control, eventually going to the shorter term, much like it is in the US. The only problem is the renewals come even faster the lower you drop the duration, and they're adding new debt at a record rate. You are here. You are here. You are looking at that 10-year. Let's making sure that I'm actually showing the charts for once. It is an absolute scandal that the country has been brought to this. A great nation has been brought to this. But for everybody who said England were behind and the English were behind colonization, the Dutch East India Company, the absolute families, the legacy parasitic families that find themselves in America, the UK, and everywhere else were utilizing your nation and giving you a bad name, sending your young men as soldiers from the streets of Liverpool to fight in the opium wars way back when, in the Boer wars and every other war, sacrificing your blood, giving you the bad reputation for terrible conduct in those lands. And now you're getting your just deserts as they reverse immigrate everything in. No, my friends, you have a real problem. You have a parasitic structure that is a real problem and is feeding on your blood. That is where you are. 5.75%. That's going to take you to 5.8 on the 10-year. That is quite a short duration. That is the state of Britain's debt right here, right now. This YouTube is to warn that Britain is going to be probably one of the first. We had community members that asked for my counsel on a non-advisory basis, that I said, sell your UK properties. This is going to turn into a debt. This is 2-3 years ago. They've got out of the market in the last year and they have sold the top, in my opinion. They have done a great job. They've sold the top. There is an absolute problem in UK housing now. And you can see the headlines now support everything we warned in the late end of 2020 that would be coming for the US, the UK, and by the way, we've mentioned our Australian friends who think it only ever goes up, and our New Zealand friends and our Canadian friends. Let's go have a look at what Twitter now says about housing. Let's go UK housing prices. Let's have a look if those headlines have finally caught up with us. The news before the news. If you want the news before the news about how the psychopaths are dragging you down the sewer pipe, you hit the like button right now. Trying to give you the best truth, warning you on a non-regulated basis that, in our opinion, the following will happen. House prices will go down. Stamp duty is the barrier to the recovery of the UK housing market. He's talking about recovery because it's already in huge trouble. You don't recover if you're flying. More transactions, not rising prices. They're taking too much. They got too greedy. Labour and the United Kingdom as a whole have got on the wrong side of the Laffer curve. Once you start overtaxing, you can only keep overtaxing. You can't really walk it back until you've had a crisis because it's a doom loop. Canada now ranks number 2 in the world for worst home price to income ratio. What else? This guy in the UK rents properties himself and then rents them out at an even higher price. That's right. People were doing that. UK houses prices drop 11K despite being propped up with low rates. The low rates are not going to be low for very much longer. They're dropping in price on a notion of low rates. Those low rates are not staying. I'm busy here to tell you the rates are going up. The banks will be putting their rates up. How did the money supermarket deals go? Let's go have a look at, I think that was one of the favorite aggregator .co.uk. What will you pay nowadays for a bond? We are seeing unusual requests. Oh, dearie me. Let's see, motoring, insurance, money. Let's see if they do personal loans, personal loans, secured loans, car finance, mortgages. Compare mortgages. Let's compare a mortgage, shall we? You're ready to see what you're going to pay on a fixed rate deal. I'm buying a house. You want to buy a house with me? We're buying a house to live in. We're not going to do buy to lets. Let's say we're not a first time buyer. Have you already found a property? We have, and it is £500,000. Where are you looking to buy? England. England will do. And my deposit is £50,000. Whoops, 50,000. And I want 25 years. Let's see loan to value, search mortgage rates. Let's go and see how we're going to do. Oh, I need to do a fixed deal, mortgage type. Fixed deal. So you get initial rate. That is a teaser rate. That's literally where they'll start you. But the actual rate when your teaser period is over, a repayment mortgage of 450 over 25 years. This is where I'm reading here, by the way. over here. 450,000 over 25 years represents an APRC of 7%, the true rate. Total amount payable will be 954. You borrowed 450, you're going to pay twice that by the time all your amortization, which includes interest of 503,000, product fees of 1,000, and other fees of £100, repayment 27 months, 2,400 a month, then 273. So it's a fixed deal only for a short period, 273 months. And then it will go up to 7.49 variable. So it's actually only fixed for how many years is that? 5 times, it's about 10. Is that 10 years? We have 12 months. How many times does 12 go into 273? It looks around 20 years. Yeah. So you will be on a variable rate after that. That's the very first and best deal. Let's have a look what the others are at. 4.22, 4.25, 5-year fixed. That was only a 2-year fixed. There is no offer for a 30-year or a 25-year fix. You cannot. You will face the full brunt of the interest rate increases as debt, as a terrible investment, suddenly is exposed. It will get higher and worse. You are only getting 2-year fixes. They will only protect you. Here is a 5-year fix. 5-year fix, 4.268, and then afterwards 5.8. Variable. The variable is where you'll be killed. This will only protect you for 5 years, and you'll be paying 4.26. So actually, you're getting a 5-year debt instrument at the current, maybe what a UK or a GB 5-year would be, and then you're dropping on to whatever it is that's open market at the time. That is a terrible gamble because it will only be higher. It will only be higher. It's not going lower. That is how the UK market, and God forbid you need to spend a little bit more, and that's with a 10% deposit. So what say you peoples? What say you kind people? Do you think the property markets are going up, or do you think they're going down? Are you seeing what we're warning about? What do you think? How do you think the USD weakness can affect the Korean won long trade? That's not really what we're talking about, but the dollar is getting weaker. Korean won long trade will be an eventual crisis, possibly on an interest rate spike in the dollar. Long swaps costing too much in your SFX link. It depends. It doesn't do me. I wouldn't do long-term trading on trading platforms. Do investing for trading platforms. If you want to hold a 2-year Ethereum position or something, don't use a trading platform to do it. Buy investment. I think they're going down, but how will inflation play into that price? So what tends to happen is when you start to have a run on the debt market, in actual fact, last time with Liz Truss. So what happened last time with Liz Truss? Actually, the currency drops. That suddenly means you face a inflation surge on everything that's imported. So if you have a look at the Euro GBP, good question. Am I still sharing screen? No, I'm not. So let's make sure we do this time. So let's have a look at a currency. What tends to happen? I don't want to include the dollar in this because it's been too weak. The Euro GBP, Euro's been okay. It's not a great currency. None of them are. They're all going down. They're all going down, but the dollar still lost 12% to the euro, by the way. Did you know that? In fact, the dollar's done so badly since the beginning of this year. I have a chart for it somewhere. Let's have a look. Let's see what I'm going to see here. Let's see. Let's move along and see if we can just highlight for everybody what has gone on here. For you to understand how well the dollar has done, here's the top 25 currencies on this particular chart of the NASDAQ, because people are saying instead of a melt up, I was dealing with the typical inquiries, instead of a melt up looking like that, when you have a 27% crash and then you end up 7% higher, which is actually this, with very bad volatility. The melt up is this one, not that one. And then when you take the currency correction, this is how the dollar's done against 22. I only could take 22 of the top 25. I couldn't fit them all on. It's lost money to the Thai baht, the South African rand. The South African rand is 3% a better currency than the dollar. The Chinese yuan, 3%. Indian rupee, 3.2% a better country. Polish zloty, Canadian, all up fours. Egyptian pound, 4.5, kicking dollar's ass. Australian dollar up 5% against the dollar. New Zealand up 6. Japanese yen 6.41. Pound is 7% stronger than the dollar this year from January. Norwegian krona 9.7, almost 10. Mexican peso 11% better than the dollar. Swiss franc 11% better than the dollar. 11.15 the euro. 11.65 SEK, which is the Swedish krona, 13.5. Brazilian real, almost 14% better so far this year than the dollar. Czech krona, the Hungarian forint, almost 15% better. The ruble, 42% better than the dollar. That emerging market currency that just happens to have no debt anywhere near like the Americans and just has an absolute hoard of gold, 42% better. Trust me, this is not a melt up. That's a crash with a nominal, very minor increase. But that's a different discussion. I came here for the currency. So I'm highlighting to you the performance of the dollar and why I'll actually compare the pound to the euro. So what's going on? This is the euro GBP, which has been somewhat in the middle, largely 11% up against the dollar, like most of the others. So what do you have? Well, you have the pound looking a little bit soft against an already compromised, also by debt, currency. Let's make it not so fat. We need a square there. And what you'll see is two shooting stars here on the British pound against the euro after a move up. But let's not fool ourselves that the euro is going to be unbelievably good. It just might not have its debt crisis at the exact same moment as Britain. It might be a little bit after. For example, if we go and do the European debt markets, how does the German 30-year look like? Well, let's delog that. It obviously starts at a much lower base, but as you can see, without even having to move the box, it is moving up in terms of yields. It's moving up in terms of yields. In fact, on the weekly close last week, which has taken the month, last time you were this high, you have to go back to 2011. You have reversed a bond bull market that at the current yields on the 30-year debt of Germany, you have to go back to June 2011. Everything was lower and higher value bonds. This is a bottom and this is a move upwards for Germany in debt markets too. There it is, that's the break, and it's heading upside. This is the reversal call we gave you on the US debt markets in the late 2020, and it hadn't even finished reversing in Europe yet. There's your stall box and your final reversal low that you came out. We gave you the American bond turn call before it had even finished happening in Europe on one of the stronger nations. Who else? France, 30-year. Have a look at that yield, also reversing, going even faster up, This is very fast up. This is very fast up. Some will say, oh, but that's a rising wedge, it'll go down. No, it's bleeding up. This level, if you go to 4.29, basically 4.3 for the French, which is still lower than the British, which is why the British is in trouble. The last time you closed higher than that was 2009, the end of 2009. The end of 2009, friends, for the French. So we started with the German and we've gone to the French and we're going further back in time. In other words, bonds haven't been this weak since 2009, that was the footholds of a debt-based crisis called subprime. This is a real debt crisis. UK is next in the queue to be the one to hit the financial headlines for its black holes, with its clever Labour government doing everything it can to accelerate the destruction of a great nation's financial standing. But it comes for Europe too. Where are our Dutch friends? Nederlands. I think it'll be NE or NL. How's the Dutch 30-year? How are you doing? Well, these are all the serious financial nations, apparently. So much like the German, the last time you were this high was 2011. 14 years ago. 14 years ago. This bond market is reversing. It's reversing badly. And wait till the Americans will start saying, listen, if you don't sign this Zelensky Putin peace deal that we've brokered now, we're out as America. End of NATO. You're on your own fighting Russia if that's what you're going to go do. And that's when all your leaders are going to come across all imperial and super tough. We don't care if we stand alone. We will not let the people of Ukraine down. We will stand forever. Meanwhile, they're sending your sons and they're going to tax your economy, your businesses, your personal income. They're going to run up even bigger debt to destroy your country, to act all imperial. They're all going to be Winston Churchill all of a sudden. They're all going to be showing how resolute they are when that, or if that moment comes. Mark my words, you will see it, friends. You will see it. Here we go. Let's have a look at a couple of others. We did France, we did Germany, we did the Dutch. Who else can we do? Who else can we do of that? Maybe we should do other durations. These are all bond rates, by the way. So take a lesson if you're in Holland. Take a lesson if you're in Germany. Take a lesson if you're in France. By the way, your rates will go up too. You still have time. There are people that are not so well advised. It's a good time to think about those moving decisions you should be making and getting out of Dodge. That's where I stand right now. What should happen? What should follow the UK? You think the UK is a special place of idiocy for their government management? The same people that have orchestrated the downfall and orchestrating the downfall of that nation and country are busy doing the same to you in the same way. And it is coming. It is coming. Debt-based collapse. That is our core phrase from 2020. Everything is here and around and is surrounding you on a debt-based collapse, which means the asset value down, the interest rates up, unaffordable housing. You cannot get out of it. You may be asked for additional deposits. Your rates will go a whole bunch higher. If you don't have a fixed for full-term rate, you will face much higher mortgage payments and you can forget selling. You'll be trapped. And the taxes on those that own will go up and up and up to help equalize a more equitable society. Solidarity for the weaker in society. You do understand, for the safety of the nation. You do understand. Stand by for buzzwords, word salad sandwiches of communistic tunes that's going to drive you absolutely bonkers. If you ever aspired to be better, if you were aspirational, self-reliant, those are not the countries to be living in. Hear me now, and I've been telling you for a decade. You need to leave, leave, leave. And you don't like it, you will eat the consequences of staying. Hear me now, like I've never said before. This is a truth as so clear as day to me that I've been seeing coming, that I've been calling, and everything keeps walking towards it. It's walking like a duck. It's quacking like a duck. It's got feathers and a bill, and it's paddling on the water, coming straight at you with a time bomb attached to it. You can keep holding on, but I can tell you it's going to happen. It's going to happen. España. Viva España. Did you have a home in the sun? Well, it's coming for you there as well. It's actually not as bad as some of the northern European ones, 2014. It's still over 9 years away, but believe you me, it relies on that German backstop. Believe you me, Portugal, Italy, Greece, Spain, all rely on the on the German backstop. And when those German rates go higher, they will always be at or above the German rates because they're absolutely reliant on it. They are ward of state of the German axis. And so is Cyprus, for that matter. For those of you that are buying in the place in the sun, all the TV shows having you buy with a mortgage, a place in the sun. This is a debt-based collapse. It's going to be brutal on the housing market. But remember this. They can mask how brutal it is in the housing market to some degree on fiat debasement. This is the difference between nominal and real terms. What do you do with all your assets? Every asset you own, you should divide by gold. How much is it worth in gold ounces? I can absolutely assure you that your property in gold ounces will fall through the floor, no matter how much fiat debasement they do to try keep relative real values not going down too much. And I still think in nominal terms, in a debased fiat, that will happen, much like the people that think this is a melt up in the NASDAQ, when in actual fact it's 7% higher after a 26% crash on a currency that's lost 12% to the euro, 40% to the ruble, and 15% to the Hungarian forint. Okay, no, it isn't. This is a melt up, guys. We need to also handle this topic. So it's a debt-based crash. UK is next, but here's a couple of other things you need to see and understand if you're in the melt up school. The real melt up. Let's go pivot NASDAQ. We give the housing market, the rates market, the bonds market a bit of a break. This was a melt up. 94 to 99. It didn't matter if you rebased and took the NASDAQ and divided it by gold. .com shares absolutely killed it and were already in a bull market and at all-time highs. That was already higher than it had ever been before in nominal terms and real rebased to gold terms. It was already in a bull market, already at all-time highs, and then went melt up. That's the definition of a melt up. A recovery from a crash. This is not a melt up. That is not a melt up. You've been here before. You've been that low before. Coming up fast is a bounce after a crash. It's a bounce. That is a bounce. It's a surge of a bounce. It's fast. It's a massive recovery. It is not a melt up. You are not in new territory. You are not in new territory. You are not going exponential. You must go exponential, already be in a bull market at all-time highs, and then violently surge up. It's a blow-off event. That is what a melt up definition is. That 94, 99, even divided by gold, didn't matter. You went exponentially up. You did 907%. That was a great time to own Amazon, Cisco, and all those stocks until the turn, of course, where you got the crash. So people predicting melt ups. This is not a melt up. That right there is not a melt up in real terms at all. In actual fact, it's a 27.51% underperformance. Of course, you had an all-time high. The currency just got debased, where all currencies are being debased in a debt-based world, and yours particularly got debased on average 11% to its main competitor, the euro. Of course, it's up 7% in nominal terms. It doesn't matter that it's at an all-time high in nominal terms. It's not doing a parabola melt up, and it's not adjusted in any mean terms, the great asset. So people that say be in shares for the melt up are wrong. Be in gold during this period for the protection, because gold has outperformed that. We've rebased it to gold. It's 27.51% lower over the duration from 2020. So it's underperformed. A melt up is a performance by all measures. It's an absolute mania where everybody is only buying that. That's why it goes up even when it's rebased by gold. Right now, the central bankers are buying gold. Everybody knows. This is an important distinction that many people don't get. They don't understand definitions. Something going up fast after a crash is not a melt-up. It's a surge. It's a rally. It's a fast rally. It's a chronic rally, but it doesn't matter. You've been there before. There's a massive difference between nominal and real term values. Use gold. Your wealth and how you see your standing in the world should be measured in gold ounces. If you want to have a crypto portfolio, feel free to do Bitcoin, but you can also do gold ounces even on a crypto portfolio. Watch for the adjusted real return that you get if you're active when you divide by gold ounces for the volatility you have to endure. And no, it's not a feature. Things that are very volatile typically get a lower rating for adjusted return. That's called financial mathematics. Don't listen to Michael Saylor and everybody else. We're doing financial education day to day, and the UK is up. The debt markets are coming. They're going to crash. We're going from August into September, October. We're seeing resurgence moves, resurgent moves going to the upside on the yields in UK debt, and it's happening in Europe too. You will be next. Every people watching this is a Western debt-based collapse. It will even have knock-on effects for all parts of the world, but the biggest ones are the West. Your wealth will be absolutely flattened. And you don't have to be in the environment. It's not just talent, it's about environment. You don't have to be in that environment of scarcity where no one will have any money to do anything. It doesn't matter if you've launched the best product, the best business, the best everything. Everybody's on their knees. They're not in a buying state of mind. It's going to be very, very depressional in the Western world. And the opportunity is in gold and in silver. There will be periods of hyperstagflation, which means your economy will be stagnating immensely in an environment that things are stubbornly expensive and actually still climbing in terms of everything. That is your fiat currency debasement. It's an accelerated extreme version of the 70s because we're not in the same situation of the 70s. We have far more debt. This is a very dangerous economic time to be in the Western world, my friends. I can't put it anywhere else. I'm not going to sugarcoat it. You had your Goldilocks. We accepted that and we called it. We're not a doomer, but this is where you're at. What other questions do you have for me before I wind it down? Have a lie down afterwards. I'm born of energy. I am born a man of energy. Austrian economics, indeed. Just study. Australian housing prices. Indian demand is off the scale. So Indian demand is off the scale for now. I'm assuming that they still require, at your heady heights, some element of financial backing. Yes, they're doing the social mixing and the social immigration agenda everywhere, I'm sure. But nonetheless, I'm imagining they're not all multimillionaires buying in cash. As a result, the lending criteria and the Aussie. Let's do Aussie debt. Australia always thinks it's different. It's different for them. Of course, they were close to China and they were selling ores to China during that period. Let's see what your debt markets look like. There's the Australian 30-year. That would have been 2023. And let's go weekly on that. This is again, it's the same story, friends. We're going higher. Let's share that screen and do the Australian debt. So there's the chart, the 30-year. And you keep drawing new floors. It was it was down here at 4.2. Then it became 4.4. Then it became 4.6. Now the new floor is 4.8. You've just had a hammer here. You will trade through these levels, 5.2. and you will take out that high. That is my technical prediction for the Australian debt market. By the way, there have been HVFs before on it. It's similar to all the others, but not exactly. It's got a slight difference to it, but the macro is the same. Let's just draw a structure for you. You can see a previous, it's a faultless method for drawing, let me just refresh this. Get it down to the weekly. Let me draw this for you. Here is a previous example of an upside structure on the Aussie that said you will go higher. Tell me if that worked well for you. Hey, I would have jumped on here if I was covering the Aussie market right there as this was happening, and I would have said the following to you. You asked for this. I don't even watch the Aussie that often. This is the first time in a while I've come here. Hey, guys, it's on balance of probabilities that you've just triggered down here at 4%, 4.05, and I'm telling you that in a short time frame before this date, November, or call it December 23. So I would have said in May of 23, I would have said before December, I'm of the opinion you will have traded through target of 5% on the Aussie 30-year at this point. So roughly on this day or during this week, as it happened, like I'm doing today on the Friday triggering of last week on the UK markets. I would have sat here if I was employed to give takes on the Australian typical mortgage duration debt instrument. I would have sat here 15th of May 2023 utilizing HVF method and said, guys, I know it's only 4% and it's just happened. And actually during this week, you were as low as 3.9, but you're going through 5 before December. That's what I would have said. Hear me? That's the method. You're going through 5 before December. You would have traded on October the 30th, a high of 5.39, almost 5.4. I would have sat there roughly mid-year and told you before the year end, you're going to be above 5. And you would have traded 5.4 in October, ahead of schedule. Okay, so for those that think we're potty and we get it wrong all the time, it's not. The method is impeccable. This is your top out. You have been in a stall box area, literally around my legacy target. It's sitting right there for you. Australian friends, where are you? Hear me now. Well done for the rugby, by the way. You were amazing. You absolutely killed it on that target. When you hit it over there, you made the high over there. Then, of course, pull back everything. Hyper-normalization. Oh, it's all okay. We come back down. We're not as bad. You didn't come back down to where you were. You came back and you sat on the first interim target. You formed a box here, and then you broke out of that, and you've now been forming a box there. There's your locust patty in your New World Order burger sitting right there. And you're sitting on that target. You've just thrown down a hammer. You didn't touch the low end as you did every time before, just like that squeezing up HVF I was showing you on the UK. We are inching towards global Western currency. It's the same story, just a slightly different tune. It's the same instruments. It's the same rhythm. It's the same everything. It's the same vocalist. You're listening to a rehash of the same song. Last time you were rejected there, then there. Now it's creeping higher, not getting to the low side. Massive hammer there. You aren't seeing these 4.8 rates again. I'm saying to you, you're going higher on this instrument. You will break out of the top side of this and everyone will be distracted with the United Kingdom being the dumbest kid in the room, and your rates will be creeping up. Because not only does the United Kingdom go up, everybody realizes that globally this is a debt-based crash. They realize what we told them in September 2020 and reaffirmed all the way down to that right shoulder and that neckline brace. Debt-based collapse, debt-based collapse. Get it in your head, Australia, New Zealand, Canada, you're no different. This is a debt-based collapse. And as the other nations go into debt-based crises, it's bad for you too. Even though you go, oh, thank God, he's the stupid kid in the room. At least the teacher never picked on me. Your turn is coming. Your turn is coming. We're saying for my Canadian friends, they'll all still be sleeping, of course. Maybe a couple of early birds are up. The Canadian 30-year, and I will do New Zealand if you want it too. There is no difference. We are moving around the planet, incredible distances, but the song remains the same. Think of Led Zeppelin. The song remains the same. It was a great hit. The song does remain the same. Here's a draw for you on Canada. You were as low as 3%. You're going for 4.8. Massive difference. Massive difference. Yes, you've got resources. Yes, boy, you're going to be selling them. You're going to be mortgaging all the family silver, the resources of your beautiful land in Canada. What about New Zealand? New Zealanders in the house. If you're a Kiwi in the house, what say you? You think it's different for you? You're neither Australia nor any of the others. It seems I don't have bonds for New Zealand, or it's something else. Let's see who we have. No. I don't have them for New Zealand, so I can't do it. But you will be the same. As assured as I can be, you will be the same. Slightly different chart, same thing. What if the Netherlands got out of the EU? Good luck. I wish you could. I wish you truly could. Ask the Greeks. What happened to our friend Varoufakis? What was his name? Help me. Who's now become a sort of fringe character on the YouTube. He was driving his bike trying to save Greece from the EU auspices and all the great evil. How did it work out for him? Not so great. He got elbowed out and they did a deal with the other people. Someone will sell the soul and kiss the Zaya ring for the money. That's how it works. Real freedom cannot be voted for. Real freedom is never voted for. Varoufakis Yanis. Thank you, Starduster. Australian real estate is overpriced, and even an insurgent's Indian population will have problems. There will be bag holders for you. Get out. Get out. If you own 10 investment properties with only 5% down, non-advisory business basis, if I was that guy doing Airbnb with Sydney houses, I would take all the Indians' gold. I wouldn't even let them pay me cash for it. I'll say, just take your jewelry off. Is it 4 nines? Can I distill it? How much pure gold? Go straight to gold. That's what I would do. Not what I'm telling anyone to do. You should do what you do. But I would have them buy the top for me. Let them sit that one out. Go ahead and do it. Nothing against the Indian people either. Hey, sell to anybody if you're going to sell. I won't be picky. Check 10 years. Huge head and shoulders in the making. Target around 11.5. Head, that would have to be an inverted head and shoulders if you're talking about upside targets. As someone living in the UAE for the past 17 years, can you explain why it is a trap and what expats should be doing to protect themselves apart from physical gold and silver? So the first things that will happen in the UAE and the Dubai, they all want you there. There's a reason, there's an agenda. I've noticed every YouTuber is pushing it out. We warned that there will be capital formation in the Middle East. These are the kind of people that you don't have the same real freedoms that you once had in Western worlds. Not that you have them anymore, especially in the United Kingdom and other places. But these are the places where they did torture for the Americans because the legal system there didn't even make it a crime. These are the places where they are deeply tied to the genocide of the Middle East and Levant area and the Two Rivers solution. Let's just leave it there. You really need to understand that you're just getting closer to the belly of the beast. Of course, you'll pay less tax. By the way, you'll still pay tax. Corporation tax, I think, is 9%. And they'll start ratcheting it up as well once they've got you fully in. But they need to look a lot lower for a while. You'll live in the desert. Castles built in the desert, my friends. And let me tell you, you're going to have to comply as a citizen there. I wouldn't have wanted to be on the wrong end of the Saudi or the Dubai Emirates police when it came to complying to something their overlord said. Initially, they're going to try to look as attractive as all hell. These were the people that buried teenage women up to their heads and stoned them to death not 2 decades ago. So know your medieval psychopath and who his family lineage is before you rush to him in open arms just for a lower tax break. They're better and there are other options. But that's my answer. It doesn't smell right. It doesn't smell right. I have a very good instinct. This brain up here is deeply connected to the universal, the infinite universal subconscious mind of this entire galaxy. And I can tell you, I smell rats. If this brain smells rats, he can sometimes just tell you it's a rat. The answer comes later. I've given you some ideas, but the answer comes later. They are shepherding the cattle closer to the abattoir on the promise of ever greener fields on the other side of the fence. Be very wary. Norway. What's my thoughts on Norway? Norway, big, beautiful country, not overpopulated. I like all that part of it. I don't know if we have a Norwegian debt instrument, if we don't have a Swedish one. No, I wouldn't even know what their international code is. I don't think we'll get maybe a 10. Let's see, 10. Would we have got a New Zealand on a 10-year? Yes, we could have got a 10-year New Zealand bond, by the way. We could have got a 10-year. So we never finished answering that. This will end the same. The 10-year is a little bit shorter by duration, but it's got a lot of the detail of the US. Please note, higher highs, higher lows, continuation. Yes, you get a bit of stall. Let's share the screen again so that you can see that pattern. I will get my other computer up and watch the stream next time so I can see, so I don't leave you guys behind at the same time. So you did have a little bit of a platform there. Then you had the move up and then down and then this. It's not the worst of the markets, but in the long run, it trades higher right now. It's not, the UK is like first of the queue. This will be more near the back of the queue, but it's also a 10-year, which is a shorter duration. So the longer durations are worse. So you can see that very well in the Japanese, for example. JP, still not bad off, far off all-time highs, but in terms of percentage, it's 1.581. Go up to the 30. And you can see it's 3.125. So one's at 1.58. So it gets a lot steeper the further out you go. So I'm not sure we didn't get the option of longer. But the question was actually about Norway. I would say I'm not the best person to answer on Norway. I've not actually traveled. There's beautiful roads. I'd love to ride on a motorcycle. My impression is not that they're not overwhelmed in quite the same way as Sweden was on the immigration side of things. And I wonder if that person who shot all the kids of politicians, I wonder if that had a little bit of a deterrent effect. Just thinking aloud. I'm not saying that's a good thing. It's just interesting. Norway, one thing, Sweden, the other. I'm sure there is still quite a bit, but it's not quite the Malmo of Sweden, is it? So could be an option, got a lot of oil, got a lot of wealth per capita, quite socialist. So I don't think it's a friendly place, particularly for entrepreneurs. if you can, and tax. So I think, and quite organized digitally. And remember, all the world's countries are synchronized to a degree. So those would be my criticisms. It's not a businessman's place. It's not a entrepreneur's place so much, but it's got high standards of living. So yeah, there's that. What else do you have for me? Let's switch the screen. I do reports that compares on how it's compared to the rest of the world. Norwegian krone is getting kicked like a football by the euro and the dollar. Yes, also see the debt markets though. I see your instincts and intelligence, and thank you for sharing them. Where's to move to from the West? Out of the West. Move out. And don't even over-fraternize about being 100% right. First of all, there's no perfection anywhere in this world. Number one. Most standards of living outside of the West are generally more mixed. That doesn't mean you can't get higher. I mean, I live in Cape Town and I live like a king. I eat at incredible restaurants. I have half the cost of living and I think incredible value, but it comes with its half of crazy. Out in the townships, those stats will be murder capitals of the world. But how much does it affect you? It's sad. I don't like it. But at the same time, you know, there's a danger to that. But that's why I buy cheap and I live much cheaper. So there's a trade-off. Malaysia, Indonesia, I think if I take patriotic glasses off, you know, and I try just be unfiltered and assume I'm blind on places of my own heart, I would say Malaysia and Indonesia. I think there's generally not an aggressive attitude to white Europeans there, almost a reverential, providing you behave decently. And I also think you've got a much better demographic. You could start a business there easily. I think you'll have willing and hardworking workforce that are typically not actively aggressive, but you'll always be a foreigner in a foreign land. You'll always be a gringo. You'll always be a whatever. They'll have their own name. Some of them will be flattery and some of them will be less so. But that's where you go. Unfortunately, we are destined to be diaspora. The ones that survive, because this is not just economic. This is not just economic that's planned for the West, by the way. They're not going to run a welfare state for a whole bunch of people that have been made poor forever. Trust me. It gets darker. So you need to think about it hard. Yeah. But Cape Town, southern suburbs. By the way, there's lots going on. The nations of the world they're keeping the synchronized. You need to think of this as ring a rosies. They're actually, you think some countries are better than others, and actually your country is paying to keep all the other countries going. Eurozone, von der Leyen, out of the blue, for very little clear reason, I think was giving 450 billion euros to South Africa to transition it to renewable energy. That's just globo speak for corruption. You know, why, when your country is already poor, Europe land is much poorer than it thinks in terms of are you giving money? Well, the global construct needs one entity to keep another one strong. They're not ready to all fall down. Why is Apple doing deals with Trump for 600 billion? The government and the government finances need money. That's why they're doing deals with Nvidia and Apple. All the corporate fascist companies, the governments, the EU state, the South African state, everybody is giving everybody what they need to stay alive. It's a coordinated ring. You're in a cultish ring. You're seeing corporations transferring money to the US government. Why? They could just rehome and start in China. No, because they're doing it because they need to be seen to the blame. They'll tell you it was Trump's brilliant negotiation with Apple and Nvidia that did it. No, the globalists that run the whole show, including the unicorns, say, you need to give money here to keep this going. We're not ready yet. Okay, let's create the theater that goes with it. Trump goes in there like the apprentice. You're fired and you're going to give us more money and we're a great negotiating team. Okay, yes, we agreed. Here comes the conference media for all the normies who watch the news. we've agreed to make investments in America to the tune of 600 billion and rehome and certain industries. Okay, great. No, they're just crossing. Money's run out in places, and they are searching to keep the game going in different places, and they're creating construct deals to keep funding all the different arms. Okay, because they've crowded all the wealth actually into the corporate unicorns in America. You have a bankrupt government, you have bankrupt states, particularly California as an example, and you have over consumers. Who's sitting with all the money? You've actually got international money, pumpermentals, the NASDAQ through 30 PE, that it's on the Buffett indicator never been so high. Okay, we need some money from the one that's got to keep the rest of the Ponzi going. Okay, let's do a trade deal. Make Trump the hero. He's come in for the poorest wretch. That is the American government. Totally over-indebted, needs to kill its currency, horrific trade deficits with Europe, China. You've got to create a narrative. You've got to create a narrative where you get some blood into this dying old man. When you've got these super fit, pumped up bodybuilders with massive veins in their biceps because they've all got the blood from everybody. They've been blood doped like absolute vampire corporates, which they are. So take a couple of pints from him and him and him and keep this going. And why? South Africa is not far behind Turkey in some senses in terms of indebtedness. Their government needs to be kept going. Why is the EU giving them any money to transition to a hoax? Wind farms and stuff. No, they're going to stick a couple of windmills up and they're going to steal the rest and put money in to keep the auspices of state running until they're ready to pull it down. You are already in a new world order system. You just haven't realized it. You actually think these are all separate entities. You actually think that there's in coordination, that the government didn't first give the tax breaks to Tesla for it to become a 3 trillion market cap, that California didn't pay it first for the hoax to allow it to have a bottomless overdraft to keep scaling, growing, and big. Now it's got to give it back. I seeded your hedge fund and made you a billionaire. Now you pay my open society to let immigrants in. That's how it works. This is a captured, interconnected through corporations, trusts, quangos. You've got a corporate CEO of a major asset management company, Larry Finkelstein, with his not so diverse board, that is absolutely now going to become a CEO of a new world order quango that isn't even a corporate in Europe to replace Schwab. But what about the shareholders of BlackRock? And they're thinking, what's our CEO going to get distracted? No, it doesn't matter. Nothing matters. It's figureheads, photo ops, wild statements. I told you he was going to do tokenization. I told you it was the thing that was most exciting to him. I told you that's how you will own nothing and be happy, because his farmer friends will be stuffing you with drugs and you will be tokenized, and they'll buy up all the tokens, all the digital proxies, so they own everything that you physically bought. And now it'll be rented back to you because that's how they want it. That's how they want it. And if you get crushed and you're stupid and you end up on UBI, you'll take everything government insists by your social score that you should have. How's he even do that? It's mostly in Switzerland and other places, and he's in BlackRock head offices, probably New York and California. How does it even happen? They're all one of the same. They shape shift between all the different entities that are bringing in the global communism that sees a supremacist ruling class against you. This is what you're getting, guys. We are just watching their plan roll out, and I'm telling you in the free markets how it's going down. What happens next? You shouldn't have a spare second to even take a pee if you're the CEO of BlackRock managing I don't know how many trillions of money. There should be never a free moment for people calling you. What the hell? You got a little side hustle called the World Economic Forum? You're going to pop over and do shows? These are all PR publicity people. The plan's long since been baked in. He doesn't have decisions he needs to make. He just has to be the front man for that. Just like Tesla, Elon frontman, all those composites he's sharing, and look at this amazing footage as I fly over Earth, and there's that glazed donut with little lights sparking on and all of that with his little module and all of this and the super bent Earth. What are you doing? It's already here. You are in a new world order, global communist state. They just haven't pulled the curtain back that you've been told that they know. We're all still pretending it's a capitalist world, that there's free market price discovery. We're all pretending. I'm trying to tell you, it's already done. It's already done. These guys are just actors and frontmen. Larry Fink isn't running BlackRock and engaged in every minute decision. He's surrounded himself with all the plebs that he needs. This guy's negotiating debt contracts with Argentina, a corporate in America, not a government with a government, a corporate did before they put in Milei in there, who just loves Israel. And then Schönbaum, ex-BlackRock employee, in a Roman Catholic country like Mexico, happens to be the president and is agreeing to biometrics with Trump. We told you long ago, the whole immigration thing that Biden created the problem that he brings the solution for was to get biometrics in. What's happening? Schönbaum and representatives of Mexico are looking amenably towards, for the border control. This is all surveillance statism being uploaded by the Zionists as they were, and it ends in Marxism for you. Corporate fascists, Zionist politicians, Marxism for you, ruling class supremacism for them. That's where you're at, guys. That's where you're at. And they're rolling out the collapse, the controlled demolition that we called, literally started referring to it on the anniversary of 9/11 after about 3 years. That's it. That's it. That's it. That's where you are. Smart traders borrowed from Japan and invested their USD into NASDAQ. Carry trade. Yes, they all got the script. We should all be multi-billionaires. I wish I'd got that script. Try get a Japanese loan. Try be a retail guy and try get a Japanese yen loan. I did it during the UK when I was close to all the banking cartel types. Not anymore. Argentina gold stolen and sent to London vaults, and a lot of it ending up back in America. There were unbelievable imports at the beginning of this year into America. Suddenly they've realized. So let's pivot this discussion. We've done UK debt. We've done some. We got into some reset topics. So what was coming out with Michelle, I must just check, and Luke Groman's YouTube. I'll share the link. It's not a bad one. I like, generally, he's on the money on many things, except he doesn't always see, or certainly doesn't talk it, the fact that it's not Trump being wise and, he's being told to suddenly say, well, a weak dollar is good for business and all of this. He's been told. They're managing it. It's too complex for them to understand. So he's told what his pitch is and given a heads up. So Michelle McCory and Luke Groman YouTube, I'll tweet it out after the stream. This is my reaction comment. Dollar decline is the plan. You heard it here first. Debt, you don't get debt debasement without fiat debasement. The US debt markets collapsed 55%. They were the first to fall that hard. That was in 2020. Germany's still on lower rates than America. And gold and Bitcoin to compete as neutral reserve assets. So here's the difference. Bitcoin, and they talk about, Michelle says, but Satoshi Nakamoto is the biggest holder. I'm like, it is the NSA stroke USA. It will fall under, I predicted, again, 5-6 years ago, you will have, friends, 874 of you watching, 393 likes. Thank you to the 50% that giving us likes. You will have BlackRock assume control, custody, they will say. We will custody for an equitable, climate-friendly society, the Nakamoto wallet. Nakamoto wallet There isn't even a guy that's that name, as far as I'm concerned. It's whatever it wants to be. It's a fairy tale. That is a US construct. Bitcoin is almost invariably a US construct. How do you know that? By how much China rejected it. So China rejected Bitcoin and sent mining offshore. In other words, they know that it's an NSA, CIA psyop. The Americans don't have the gold that China has. They're trying to create a digital version of it. They're trying to get some gold, so they don't have none. Who knows if they ever have their true declaration as the biggest gold holder. They are definitely not the biggest holder at 8,700. I'm almost swear blind. I don't know. I lick my thumb, put it on my shirt and say, that's my bid. They're definitely not that China surpasses them. China and Russia combined probably absolutely slaughters them. China, India, and Russia combined, it's like it's not even in the same ballpark. But never mind all of that. So they're going digital. And Michael Saylor is the biggest official holder apart from Nakamoto. That guy is ex-military, Air Force, whatever, put up to this thing, given leverage, shown how to do structures, and just doubling down, turning into a Ponzi. This is America's chance to try create an alternative to gold because they don't have the same gold, or they don't have the gold. And China's going, no, we'll go the real money, thank you. Russia's going, no, thank you. We'll go the real money. Why did Russia, China? Think about this. If it's about Bitcoin versus gold, and she asked the question, you cryogenically get stored for 50 years, which one do you want to hold? And Luke squirms and he goes, well, you want to have both, you want to squirm. There's no squirming. Gold. Gold. Look at me. Ask me that question, Michelle McCory. Gold. Nothing else. Thank you. Okay? Because mainly it's America, Bitcoin. All the big wallets, all the Americans. How many Russians do you know? How many Chinese do you know? How many Indians do you know? High net worth Indians that are mega whales in Bitcoin. You're talking about Roger Ver. You're talking about, we've already said our take on Satoshi. You're talking about all the developers, Hal Finney and all of these guys. This is an American phenomenon. This is an American phenomenon. When you want to destroy America, you rug pull Bitcoin. You let them go all in on Bitcoin, pump that price to the absolute moon, and know that at any one point that thing could be gone. And it could be gone on any number of reasons. Quantum computing, you think you've got cold storage, you don't know what's on those things. They could be counting you in. They could do extraction. They could do any ways. And I'm not saying Bitcoin has to die. I'm just saying it's not going to win out over gold in the true central bankers level. On the central banks, did the British Bank of England say, we really need to double down and buy more Bitcoin? Did you see the Swiss National Bank say, we really should? No, they'll do a bit of, hey, digital money's coming, digital da-da-da-da, da-da-da-da-da. What do they want to hold? Not only what they say, what do they hold? Switzerland holds gold. Switzerland holds gold. Russia holds gold. China holds gold. Now, you think you can be smarter and say, it's gone up more. Bitcoin's gone up more. It's gone up more on a much, much smaller market cap on who knows what funny money to make it attractive so that you whale in. Just like the ARK investors. Most ARK investors in Kathy Newman's fund are deeply underwater because everybody saw the spike and whaled in the top 20% of price, 90% of holders, and they're sitting with 75% losses. That's how they'll play you, and they can eventually rug it. How does it compete next to a CBDC? Will you keep a CBDC that can be taken from you, inflated away, restricted on how much stake you buy, or are you going to convert it into Bitcoin? When they launch their CBDCs, how do these two monies coexist? Very difficult. I'll take one Satoshi for every 100,000 they throw my way of central banker shitcoin with restrictions. They can't do that. They can't have better digital money. You won't want theirs. They do not allow competition. The one saying we have always told you, they will never let you have. Listen carefully. In the eyes, glasses off, in the baby blues. They, the people we've discussed, will never, never, ever, ever let you have your own money. The basis of all historical power is the issuance of money and controlling that. They can and will not. They can and will not. Look right here. Ever, ever let you have your own money. The benevolent guy that made it all for you and disappeared into the ether. They can't let it be. It's a lie by definition. Okay? So, in terms of the question, gold or Bitcoin, it's quite simple. If you're cryogenically being stored for 50 years, you take the lower go up number that's always there, gold, because risk is averted. Risk is averted. High drawdowns and the potential to collapse under quantum computing, or for them to rug pull the all of America, is to say, we don't allow Bitcoin, and anyone holding Bitcoin will do XYZ. If China then does that, how many people can transact with China utilizing Bitcoin? How many people can with Russia? They just outlaw, boom, done. It becomes a little pet rock for a little computer inc. cyberpunk community. They won't accept it until only for as long as they can sell it easily and convert it into gold and things that they do accept as real money. So in terms of that title, the dollar decline, let's find the YouTube for you. It's a good watch, by the way, and this is a reaction video to that. I'll find it for you and I'll share it through you. Go and have a watch. I started this morning on it, and Luke is not doing anything like dollar milkshake stories. He recognizes that the dollar must go down. The trade deficits are well out of hand. Dollar decline. By the way, that doesn't mean you can't have a once-off mini spike if the rates get disorderly for America. But that's such a detail. Gold and Bitcoin. So you can trade one, you invest in the other. I wouldn't long-term invest in both. You trade the one and you invest in the other. Oh, I can't even spell. Let's just try that again. Dollar decline is the plan. And this is exactly what we told you. First, the debt goes down, then the fiat. Remember the hands? It's how it goes lockstep. That is exactly the way that it goes down. So we're talking about this specifically. And how do you position? Where is the option? And you can trade Bitcoin. I think the statist tokens have more likelihood of existing, who are totally centralized, controlled. By the way, so is Bitcoin. They think it's decentralized. It's absolute nonsense. There it is. There you go. You can go to the dentist as well. Thanks for the ad. So I will share that through our X profile. Go and watch it. But the key thing is they're making out that all of this is Trump's making and he gets it. Are we sharing screen? We are, and all of that. But in actual fact, this is all organized by permanent government. So our reaction to the video below. And Luke, in my opinion, is right on most things that he's saying. He just doesn't talk about the structures and the things that go behind it as much as I do. Let's be clear. The future of America, you have a choice. You can take Netanyahu's take on the future of America, or you can take the always positive. We're going to positivity our way out of this. That US commentators generally have, and Donald Trump. Netanyahu said, we're going to suck all the value out of it and leave it as a thinned out, wasted welfare state. And that's the direction it's heading into. The US is scrounging the cabinet at the moment for anything to eat. And they've got an old can of beans and some stale biscuits they meant to throw away a long time ago that are long life biscuits that are still there. And they're eating that. That's this discussion of mark-to-market revaluation to market of gold. That's what they're needing to do. They're so over-indebted. They've got such terrible deficits. That was the Triffin's dilemma that required them to do that. But then they took it to the nth degree with the debt issuance and the theft and the corruption and the warmongering and the battles and all of that, and the military-industrial complex enrichment of the politicians and the ADL APAC. So they give the ADL APAC all the money they need through foreign aid to Israel, which just gets cycled back. So do you want to take Netanyahu, almost the permanent totalitarian dictator of the military junta in Israel that effectively runs America, opinion, or do you want to take the political actor that did The Apprentice, that you're being told is this master negotiator, never sleeps, is negotiating a deal with Apple at the same time as Nvidia, at the same time as meeting Putin and having tea with him, and at the same time, I mean, do you actually believe these people are doing that much, or it's the dark government state permanence behind them that are orchestrating and doing all of this? They are the political fronting up face. They are front men. And this you won't hear in that video. Okay? That's what's going down. That's what's going down. And America's doubled down on no, this digital version. Bitcoin's primary purpose is as an on-ramp into digital money. For them, by the way. And a bit of enrichment along the way. And Michael Saylor borrowing and using debt, which is now devaluing, by the way, to buy a Pumpermentals token, and getting lots of copycat kids to try out compete him. And we don't want to be second, little bright-eyed boy. We don't want to become second. We intend to go and, good luck. Okay, doing all that. Come on. And China, Russia, India, everyone else, and the central banks, even in the West, reaccumulating gold. Do what they do, not what they say. Recognize there's one winner in that one. There's one winner. That's my take. Thanks for answering, Luke, but I don't think BOJ will allow that to happen, as would kill domestic. So Japan is not in the full control of its fiscal and economic affairs at the top level. They were never freed after World War II. You need to understand that. Go watch Professor Werner's work. We interviewed him before Tucker Carlson did, and with a far more economic, financial, specific take than Tucker typically brings. And you can go and see the real truth in that. And Germany never got a peace agreement, by the way, which is why they've become such lackeys and NATO junior management. How much in price gold will go down, in your opinion? I don't think it's going to go down a lot. I just think it's going to underperform it for a spell. It already has underperformed for a spell. It's actually looking okay this morning. So gold charts, people asking for the gold charts. So the point is that's a localized high. Let's share the chart. Please share the chart. Let's do it. Entire screen eventually will go up. And let's talk. Here's the gold. That's the 4 hourly. We don't want that. Let's go up to a little bit bigger time frame. Let's go half a day. This was the warning that I told you was a bit of a blow off. You'd already met targets when you ran the 3,000 that we'd predicted. That's a degree of blow off. So you're getting a localized high. A localized high means you're a little bit bloated, okay? You ate a bit too much. You had 6 pizzas and 9 beers, and there's a little bit of burping and maybe a bit of farting going on, all right? You did run a marathon, but you probably overdid it a bit, especially with that final flurry. So now you're on the couch, and guess what? You're not going to be productive and doing that much anymore. You're not running new marathons on that amount of pizza and that amount of beers. So your system is now dealing with it. It's called congestion, okay? So you're sitting in a bit of a period of congestion. This has already been quite an extensive period of congestion. You broke that bagel. That just tells you you're not ready yet. You broke that bagel when we thought that was the breakout. We were like, we're off. We ran you. We were there. Not right. Pull back. It was not 1 pizza and 3 beers. It was 6 pizzas and 9 beers. Okay, different story. All right. So now we're rallying. You're actually getting to a point now that we have basing, descending grind line over here. So it's not being allowed to fall too far, but it's not yet got upward zip. This is kind of okay, but it's not as big. So you've had 1 sell, 2 sell. There could be a little bit more. You could have another sell into here. But this is not the end of the world. You're still in the range of 3,250. And let me say this, interest rates, everyone will tell you interest rates up bad for gold. In these times, no. How did he say that? And you won't hear that on any of these other commentators as well, including the video I just shared. Even though they got to the same narrative and were heroized on Zero Hedge for saying, yes, people are selling the debt and buying gold. Thank you. We said that in 2020. But anyway, other people are saying it now and getting the plaudits because they wear suits and stuff and behave better than I do. That's okay. But if you get a spike in interest rates, that means people are dumping debt. And they aren't going to run into some other nation with the same problems debt, even if a little earlier in the cycle, because they know they're going to have to be a seller of that as well. So they'll go into gold. So we've already shown once, and that was here, that in the peak Trump tariff tantrum, where interest rates spiked, which is exactly what happened, interest rates spiked, American debt dumped, and what happened? Gold that had already run its target at 3,000 that we had given you from the year before and said it's a good time, you could even get away with some leverage to the upside, non-advisory, this is what I'm doing, got a super surge spike at the end of its marathon, and it popped up to 3.5. That's it. It overperformed. It's congesting now, and that's where we are. You might not break this 3,250 at all. This could be a good support. You might not break that at all. You're going to be in range because no long-term player is thinking about getting out. I'm thinking, when's the last cheap moment, because it's cheap now for what's coming, to put another whale order in and accumulate physical, okay? Because at some point this can turn into a falling wedge and you bump, you take out that localized high, and then once this one's gone at 3,440, you're off. And then that means 3,800 plus and heading for the 4K. That's what's happening. And if you look at the actions of what China and Russia have done, they've stopped buying treasuries long before the COVID event. And they started more aggressively accumulating gold for surpluses. So the rest of the world, but America, who's saying, hey, we might have this Bitcoin digital, strategic reserve. The rest of the world's going, yeah, nice. I'll have some gold, please. That trade surplus with America, turn it into gold, please. Turn it into gold. So America is like copium for the fact that they're bankrupt. They're creating all sorts of new ruses, the Bitcoin, the on-ramp, the everything. We're going to do this. We're going to have a gold-backed bond, which will have a little bit of gold and pay an interest. All of that. This is all creative thinking for someone who's drowning. Okay? Nobody else has to do anything. They just have to do nothing and let the drowner drown. While saying, do this. How about a lifeboat? How about this? Throw me this. What about a big bird coming in, grabbing me? All of this. No. It's okay. You have your Bitcoin. You have that. China isn't buying Bitcoin except what it confiscates. Russia, as a central bank, is not buying Bitcoin. And it is very much a narrative for the masses. A narrative for the masses. Do what they do, the big informed insiders in the countries that are not America. Because they are surviving this and the bankrupt nation is going through hell. So as much as I've said UK is first, or pushing to the front of the queue, if not first, the biggest fall is the fall of the hegemon. You're on the tallest ladder. Sorry, American friends, not what you want to hear. The biggest fall is the fall of the hegemon, because you've had an ease of living where it was almost easy to make money. You could be sloppy, you could be, in business, there was always access to capital, there was always loan finance, there was always everything. You don't realize it, but it was the big easy. See how hard it is to make a shekel in an emerging market nation with a business. How much more service you have to give, how much harder, how much more competitive it is. So the biggest fall is the hegemon, and that cost of living goes through the roof. So to everyone who says, and there's economic modelers out there, I'm not going to name them, but they say the Fed has already tamed inflation. In fact, it's our view that the inflation is lower than the Fed's target. There's a guy out there who's saying that. He's in the same guy as the melt-up camp. That's why he thinks it's a melt-up. If you rebase for inflation, nothing is a melt-up right now. And gold is the rebasement for a melt-up. And if you don't think there's stagflation or any meaningful inflation at all, then for me, you're sleeping. Because you don't get a Walmart bill in 2020 that costs 139% more in 2025. That's 2.4x in 5 years. 2.4x. That must be close to 20% devaluation. That's in an environment where you've been devaluing on average since in the last 54 years at 8.4%, which is already very, very high and much higher than any of the BLS stats for that period will ever tell you. So they lie. You've got to understand, when you're desperate and you're drowning, of course you lie. You get all your stats to lie. The last thing you want everyone to realize is that they see everything you see. Information asymmetry is their control. An asymmetry in truth of the situation. The more they can get you to buy onto lies, the inflation rate, how many jobs are created. We call it the fake number day for a reason and have done for years. The rebasing of the fake number at the month ends and at the year ends. Twice they cut it back, twice. But they all react to the new number. It's like that. It's like Charlie Brown kicking the ball with Lucy. I mean, how many times do you want to get caught? And then it's there was no recession. We had so much amazing employment during the Biden administration. And now those numbers have all been chopped down. So actually, why haven't they gone back and admitted that they were in a recession? Only much later will they do that. When the lie no longer matters, they'll tell you that the Mossad CIA killed Kennedy, in a movie. That's how it works. It's absolute theater. My missus and I were choosing to watch something that had a conspiratorial slant. I think it's called Eddington on, yes, Netflix, that terrible thing that I mock you all for watching. We watched it on that because it was a specific thing, but we watched it with a critical eye for what we could learn. And there's every COVID meme, every single thing was being shared, all the conspiracies. You are here, the satellite paying taxes to PEDO, all of that, all on there in plain. They're showing it to you, and they're making out these guys, are the nutty loons, the conspiracy theorists. Okay, so gold is in a range. The chart in terms of gold, it's in a range. It can ease back a little lower, more medium term. It's going to go to the high end of the range, and I think it breaks out. I don't think someone asked, is it going to 2.7? That's not even on the chart down here. If the only way we do something that's outside of these two blue lines is if the debt crisis that's coming for the UK blows up into a huge thing, a major, which I think it can, by the way, and then it's contagion and Europe and America and IMF and bailouts, and you have a major, a subprime type event, or if they bring in a CV19 lockdown type event, then you could have disinflation and you could get down there. Then we break to the downside. Then that turns into a slap in the face, and we're on a ledge here that we then break. So I would be concerned if you run 2250. So here's the technical answer. Gold shouldn't run these two values. I won't be trading it long at all right now, generally, but I would be concerned for its future if it breaks 3250, that low there. And I go on to red alert for that on that low there. So I'll give you a number for it. The low is, let's just rub out the lines that are hiding it. Here comes the lines. So the low is 3268. I go on red alert. Let's put the alert on, and then 3250. I'd even consider shorting to cover what I'm losing on my investment. It means there's a demand destroying event of some form, either financial, the debt-based contagion, or they've gone and done something else. Think the CV19 lockdown, whatever, other things in there. So that's it. Otherwise, short of any of those things happening, they continue with dollar debasement, debt debasement everywhere. And your pensions, by the way, are losing value because they all probably have it, unless you have a 401k that you have management on and you have no debt instruments. So yes, the stock markets across many of the worlds, not just the US worlds, will go up nominally. That's why we have put the Singapore Times Index, the Straits Index up there, because some of the valuations in America will be deemed so eye-watering, some smart money will still leave the very high US market for equity markets elsewhere. So equity markets generally nominally will go up, and some will in real terms go up, particularly as there's a rotation out of America, as there's fears over their debt situation. But that doesn't mean the American markets can still nominally go higher and higher, unless they do violently so from an all-time high position and go violently up for a significant move, as we illustrated on the NASDAQ, where you make 30 or 40% in a short duration in a blow-off move. That's a melt-up. And then the people that said that will indeed be right, but in nominal terms, you still, in real terms, you still want to divide that by gold and see, was it the asset to hold? And I don't think you're going to get that blow off without funny money. And by the way, lots of M2 is being put into the marketplace right now, just to hold it up where it is. And if you had a major stock market correction now, you're going to have all the asset classes in the US debasing badly on a debasing dollar. So they really don't want a stock market crash too much here. But a lot of insiders have been selling. As with Bitcoin, going back to the Bitcoin versus gold and 50 years in a chamber. Why are all people that were so patient, they would hold since 2009, 2010, 2011. Let's take the average there, 2010. 15 years you would hold, patient as all hell, sitting through 80% corrections. 85 earlier on, but now you sell, and you sell just as this new leveraged copycat strategy companies are all coming on board to be your exit liquidity. I couldn't think of anything more well arranged, actually, and that is all going to be US based intelligence dark state, in my opinion. And you know, that's my best guess. It's been created. It's been created for you. It's a new thing. So be very careful out there. Let's have a look at the comments and then we're finished. Anything else apart from on the gold chart that you want to ask? That's gold. Don't buy a gold ETF. Buy physical. Because the chance of that day coming is getting closer and you'll get cash settled, if that. So I think the status cryptos go up. I think Ethereum will outperform Bitcoin. I think Link, I think XRP, I think might start warming up a bit again. I think a number of tokens. We're talking about some of those in the community and some I haven't mentioned. Snyder, I think, is saying a debt crisis would be found in credit to small to medium-sized businesses, consumer and interbank lending. I think there's debt crises ready to blow on every level. Commercial property, at the national level, at the state level, at the business level, and at the personal level, which is mortgages, personal loans, subprime cars, subprime insurance. HBAR is included in those status ones, yes. What about gold ETC? iShares physical. I don't know ETC. I don't like ETFs. I don't know what ETC is unless you mistyped. So if you utilize pure gold below, you can also use ITM trading for the US audience in the links below. You can also trade continuation in what's going to have huge trends with major volatility and strong moves. If you understand the economic model, you can be on the right side of very big moves, which could, from what we are saying, point to debt downside on the UK, for example. So shorts on UK debt possibly may come on the pound as well. Silver, let's cover silver. So silver in the mix. In fact, just to be clear, guys, I think I'd even go long gold here. I won't wait for 3,440. So I'd do the high of 3,409. But just remember this, as we warned you, each month has had a sell-off back down. Sell-off back down. That was overperformance. It couldn't hold. Sell-off back down. Doji shooting star. Red candle body shooting star. And you've got a 50% sell-off down. So we need to see how this one closes. But I'd probably start getting long at 3,410. I must share the chart. Let me just get that up. Share again. So let's just show that gold quickly. This is the monthly. I was just highlighting those pushbacks. So there could be a higher chance of that demand destroying event, which could see that 3,250 run, and then maybe you'll have a short. But if it doesn't happen on this month and we hold and we don't get knocked down like we did on all the months before, that will be a sign of relative strength. So it's quite an interesting monthly chart. So the question was silver. So silver, I mean, we are big silver fans, and we see the gold silver ratio potentially having a moment where it trades single digit. You did have a shooting star here. As yet, it hasn't triggered. You would need silver to break that low for it to be a bear signal trigger. So if we got a demand destroying major event that was very disinflationary and everyone was selling everything that wasn't tied down, possibly, but at the moment you're moving away from that, and that shooting star gets negated on its high. So it's either or on it. And on the bigger time frames, I mean, it's beautiful. There's no arguing the eventual. So the question is more about what's going to happen nowish. And I can tell you, this is a very defended by volume place, which I expected us to run into some resistance here and for people to get frustrated. So if I just move that to a higher months quarterly, let's do this. Let's get the volume. Pull it through. You see this part of the volume. This is exponential chart. It's log. fact, I don't need to put 2 on there. We can just use the ones. See, a lot of the volume is in the meat of the area. The 70% volume is here. We are north of that. It's very thin volume that traded here. A little bit more there, but then back to very thin. So where are we now? It's been a very hard defended place. But once you get above it, so you can see defended hard, sold down, defended hard, sold down. And this is the highest candle close you're at right now on the quarterly chart. So what are we looking at? Let's just point this out and take all the lines off, all the work. Right now, if we closed today, this level is the highest quarterly close ever. That was an open, not a close. The close was there, but even the open was lower. The next highest close was there. That one's close is there, and even its open is lower. So there is no candle body at this height already, 38, even though you traded 50. That's how hard they spanked the Hunt brothers in the 80s from finding true price discovery, and later here in 2011. When it gets to those kind of levels, they're going to do all in their power. But when they give up and they lose, so real resistance that fights hard falls hard. So you should expect to need to be patient, but then all your Christmases come in one day afterwards for silver. But this is the highest candle body if we close today. Let's see if it's allowed to close that high on a quarterly basis at the end of this quarter. July, August, September. You have what's left of this month, 12 days, and one other month. So there's still a bit more turns, and it could be lower, it could be pushed down. I would expect more push down and push back before, unless it's allowed to walk very slowly out and you have a lot of candle bodies on the way, and then it gets slammed. I don't know how they're going to expend their energy at slamming it, but it'll come. Gold silver ratio for fans, gold silver ratio, we'll finish on that. XAU, XAG. Not very technically talkative at the moment. This broke out to the upside, that broke back down. Descending triangle in the end at the 98. Broke hard, then it bled out. Shows you that not all falling wedges break up. And now you've got this. So it's going to be interesting to see. 86 is the low of the recent. Over 106 was the high. Bit of a stall box period here before we went higher. But the overall, on the bigger time frames, we're not at a significant level particularly. We need to see the 70s run to the downside to get our gold-based wealth recognition. So if I turn that back on, you can see this is a bit of a resistance zone at 90. We haven't gone far away from it. We often spend time clustering up against these levels. And it's either a rejection, and every now and then it's a pop out. So what happens next? If it's a demand destroying event that is violent, we pop out that way. If it's just more dollar and debt, carry on as we are, general stuff happening, but nothing too major, I think you pop out downside. And it gets significant for us when you run the 76, the 75, and that's your early warning, 79. That extreme low is actually at 73, but I think when you get below there, it'll be very interesting. We need to see that we can run this zone of lows, because we've been recently trapped for quite an extended period, since about July of 2021. Remember, the high was 2021. We've had a boxing zone. Let's do a different color. Like that, with one pop out, but it's been mainly here. So we need to get out of this box one way or the other. If it first goes higher, we'll get a bigger overall move in the end, but you're going to wait longer. If it goes lower, we'll either stay in the range and come back up, but if we eventually break the bottom, that's our We'll be seeing it in the silver chart numbers. We'll have been through 50. It's interesting, if silver's to stay at 38, 39s, let's say, how high does gold get before it has to start moving? So let's just do a math sum together. If you go back up to, say, 105, which you were, and we're at 38, 39. Let's go 38. What was the silver price? I think it's 38 times 105. You could have gold creep up higher. You could get gold to 4,000. And you could go up to a 105 gold silver ratio and not have moved on silver meaningfully. But I don't think that happens unless it's a demand destroying event. So I think we break out of this blue box at some point, but we might churn for a while there for quite some time. So I still think the aggregate relationship of 75 to 99 to 100 is still where we're bouncing out until we get evidence otherwise. So we want gold up because it will drag silver up. That 50, when it goes, though, I think it will be free market then, but we'll probably have all kinds of crises then. Okay, that's 800 of you, 555 likes. Yeah, boat accident, monkey wrench. Stay in the box. Yes, keep in. Klaus was drawing too much attention. Yeah. I've made some comments, but I can't add anything worth saying. I don't know anything. To ready his cyber attack. Running way late for this one. Looks finishing the live and going straight into replay mode. Yeah. Okay, guys. That's it. An update. UK debt markets, watch for the headlines. General debt markets, watch for the headlines. Following that, any debt crisis actually is good for gold, because it shifts more money out of the debt into gold, even though it means rates up. It goes contrary to the template because this is a reserve asset crisis now. Bonds are no longer seen as a reserve asset. The world suddenly woke up a couple of years after us. Good luck. Trade carefully. If you trade at all, have a method. We help with that. That's what we do. We want to build wealth in reset times. We want to preserve wealth in reset times for everyday people. And we want to secure financial freedoms for everyday people. And you need to realize there's a predatory class out there, and they're not interested in you achieving any of those three things. So bear in mind, you might need help. You might need support. And actually, you come out of this a lot wealthier in real terms, potentially. There's real opportunities. For everything that sounds dark out there, there's real opportunities. Truly, real opportunities for wealth building. We can't stop the larger agenda that they're probably bringing down on us, but we can be better prepared. And that's incredibly valuable thing. So till next time, talk further. Keep your spirits up, exercise, walk in nature, dance, listen to music, socialize with good quality friends that are awake, and your family members, of course, and travel and see the world. Do all those things. Tick boxes on your bucket list, and thereby live your life to the fullest day for day. And I think with that, you'll be in a good state of mood, seek to build wealth, help others, give value to others by doing the same, share your wisdom freely and kindly. Try stay humble. We are always trying to stay humble and losing often. We get a lot wrong, by the way. Okay, till next time, I'll catch you later. Bye-bye.